When war breaks out, the markets react fast, and the rich know exactly what to buy. Whether it's a full-scale world war or just rising conflict somewhere in the world, one thing's clear: money moves quick. While most people are panicking, the wealthy are quietly positioning their portfolios. Today I'm breaking down 5 sectors and specific stocks that have a habit of surging during times of war, and showing you how some investors quietly profit when the world's on edge. This is the weekly paycheck. Let's break it down. Let's rewind. During World War II, defense stocks like Boeing and General Motors absolutely boomed thanks to massive military contracts. In the Iraq War, Halliburton's shares surged over 200%. When Russia invaded Ukraine in 2022, oil stocks jumped hard, and global defense contractors saw record orders. History doesn't repeat itself exactly, but it sure does rhyme. Investors who spot the signs early, win early. First sector: defense and weapons manufacturers. War means weapons, and weapons mean defense contractors. The US and NATO allies ramp up military spending, and these are the stocks that usually benefit. Lockheed Martin for fighter jets, Raytheon for missiles and air defense, Northrop Grumman for surveillance and drones, and BAE Systems, Europe's big defense player. Lockheed Martin gained over 35% in the year after Russia went into Ukraine. Coincidence? Nah. Next up, cybersecurity and military tech. Modern wars aren't just boots on the ground, they're bites in the cloud. State-sponsored hackers, infrastructure getting smashed by cyber attacks, and cyber defense stocks take off. Palantir for big data, CrowdStrike for endpoint security, Booz Allen Hamilton for defense consulting. In this digital age, war is fought on screens as much as streets. Sector 3, oil, energy, and fossil fuels. Global conflict often disrupts oil supply, which means prices spike. That's why energy companies end up as wartime winners. Think ExxonMobil, Chevron, Shell, and BP. When energy prices went wild in 2022, oil companies posted record profits, even as the rest of the economy struggled. Sector 4, agriculture and food security. War shakes up food supply chains, and prices go up. Companies tied to fertilizers, farming, and food distribution see a surge. Archer-Daniels-Midland, Mosaic for fertilizer, Deere & Co. for agricultural machinery. As shortages bite, these companies see demand skyrocket. Fifth sector: logistics and military transport. In war, logistics are everything. FedEx, Huntington Ingalls for shipbuilding, Maersk for global shipping. They may not sound sexy, but they move nations. Here's the real secret. The rich prepare, the rest react. Before any headline drops, billionaires are quietly moving capital. They shift into safe haven assets like gold and farmland. They diversify across borders. Most importantly, they buy early. When prices are still low, they don't panic, they profit. So how do you protect yourself without rolling the dice? If you're not a trader or analyst, consider ETFs like ITA for aerospace and defense, XLE for energy, or CIBR for cybersecurity. This gives you exposure without betting the farm on a single company. Here's the harsh truth. War doesn't just destroy wealth, it builds it too, for some. The next global crisis might already be brewing. So, the real question is not if war will move markets, but whether you'll be ready when it does. Subscribe for more deep dives like this. And let me know in the comments, what's in your portfolio right now?